Good morning. Today is September 16th, 2025. It's a Tuesday. So, first of all, TSX closed yesterday 0.5%, finishing near the highs once again. And it was a quiet day yesterday just because of both the Bank of Canada decision and the Fed decision of what's going to come tomorrow. So, it was pretty quiet. But today's drivers were tech, energy, consumer discretionary. They did the heavy lifting. Grocers, consumer staples, communication, they were the losers today. And US markets did have a record high as well. But one thing I noticed was gold was up by 0.9% and oil was up almost 1%. So overall, both sides of US and Canada, we are anticipating 0.25 rate cut. And the other thing that we would need to look at is also tariff issues with US and China with the chip makers. So it's not going to affect us yet, but obviously it will be a trickle-down effect that may affect us in the near future. Now, after this, I want to talk about the bonds. So first of all, the 2-year bond is coming down once again to 2.49. 5 years at 2.74 and the 10 years at 3.17. So pretty much it's coming down slowly but steadily. And what's going to happen is most likely this is going to cost cheaper borrowing costs for mortgages and other fixed loans. But it's going to be more effective after the rate cut when it gets cemented. Then we would see actual change in the mortgage for fixed mortgages probably end of this month or early of next month. But definitely if you're having a variable mortgage, you'll probably see a difference on not Wednesday, but the next mortgage payment itself. So today, the other thing I want to talk about is real estate. Today, I want to focus on York region. So the average, ask to sell ratio today was, for the last 7 days was 1.028. That means if it's $1 million, it was selling for $1,028,000. It's still a good balanced market. It's not over asking like crazy like before. So it's still a good balanced market. Average price is still floating around $1 million and it's up by 1% week over week. But one thing I'm concerned of is 15% is the listing to sales ratio. That means it's a super duper buyer's market. And that's something that we need to be focusing on for the next few weeks after the rate cut, if it's going to still stay the same or if the rate cut's going to change that. New listings are up by 7% week over week, comparing to year over year, which is down by 4%. I have some new data that I want to include today, which is the power of sales. So there's about 7 power of sale homes in York region for the last 7 days. That means on an average day, there's 1 power of sale situation happening in York region. Again, this is new data for me as well. So let's give it a couple of months to see if it's trickling up or if it's going down. And today, I want to also talk about my main focus is the Bank of Canada rate cut and the Fed rate cut tomorrow. Again, as I said, they're anticipating a 0.25% rate cut. But keep in mind, Bank of Canada did pause for three consecutive meetings, and they had it around 2.75%. This is after 7 rate cuts since 2024. I remember when the rates were going up. I really don't remember when the rates were coming down. But the markets have priced in for a few rate cuts in the States, not as many in Canada. However, with our bonds, we are very much connected to the US market. So even though we may not be getting as many rate cuts, if the US is getting rate cuts, we would still feel that effect in the bonds in a positive way. So a couple of reasons why the rate cut may happen is because our Q2 GDP fell by 1.6% and there was an export drag, which is not really a good thing. And obviously our unemployment data for August was 7.1%. It's the highest since 2016, excluding the pandemic. And inflation, it's kind of sticky, but the core inflation is kind of sticky, but it's manageable. So overall, inflation's lower, GDP is lower, unemployment's higher. So right now it's a textbook reasoning for us to have a rate cut. So fingers crossed. And that means also we, as a country, we're not doing too well. Now, Korea did release some data for August sales. It's the best for the 4 years. Listings went up month over month, and the national average was $664,000, which is up by 1.8%. So things are happening, but they're going slowly. The other thing I want to talk about is OSFI's retooling. So OSFI is our regulator. So they're signaling easier capital treatment to nudge commercial lending and infrastructure investment. So why this matters is because if banks lean in, business credit could improve into 2026. So this will support jobs and construction, and lenders will be more likely to help out as well. So this is pretty much the gist of all the stuff that happened yesterday. And this is your morning recap on Tuesday, September 16th. And I can't wait to see what happens tomorrow. But I forgot to mention yesterday was the first day that Parliament was back in after summer break. A lot of exciting things did happen. And, for that, reach out to me if you have any more questions. But other than that, this is the major information that you guys needed. Have a great Tuesday. See you guys tomorrow.